I want to tell you about my friend Andy, who saved a little over $10,000 each year when he left his traditional tax accounting engagement and entered into a relationship with us. So Andy was a small business owner and he was making about $100,000 each year. He was self-employed, which meant that he was paying a self-employment tax of 15.3% plus an individual income tax of 22%. On each additional dollar of income that he made, he was paying 37.3%, or total for the year is about $25,000 in taxes. Andy was trapped in what we call a classic traditional engagement with his accountant, not a relationship. So Andy had to reach out to his accountant each year. His accountant didn't reach out to him. Andy would provide information at the end of the year to prepare his returns, and then his accountant would prepare his return, send him an invoice, and that'd be the last that Andy would hear from him for the year. If Andy ever did reach out to his accountant, it would usually take him days or weeks to get a response, and if he did, he received a little bill in the mail for that. We, in our relationship, first identified that Andy had been structured inefficiently. We helped him restructure his business as a different type of entity, and we helped him pay himself a salary, a reduced salary of $30,000, on which he paid his 15.3% payroll or self-employment tax, which have resulted in profits in the business, about $70,000, then he didn't have to pay any of that payroll or self-employment tax anymore. This resulted in a savings each year of about $8,109. But more than that, the more we got to know Andy, the more we realized this $100,000 was actually wrong. Andy had $10,000 of deductible expenses that he hadn't been taking advantage of because his accountant didn't know Andy personally and hadn't spent the time to get to understand his business or explain to Andy the things that he could be deducted. Additionally, he had things like his home and his car that were structured inefficiently. There and deducted on his return, just structured inefficiently, and costing him another set of deductions as well. Total, he had about $31,000 of deductible expenses that he hadn't been taking into account. This $100,000 should have only been about $69,000. And when the $69,000 was now the new net earnings for the business, now all of a sudden we had to come back and reset this lower as well. Total, Andy saved about $10,893 and is saving that each year. He decided he wanted to invest that, so he actually turned that money into, it's going to be about $2.95 million when it's all said and done when he gets to retirement age. How do we do that? It's really simple. First thing we did was just identify that he was inefficiently structured. That's a basic conversation about planning. We got to know Andy personally and we got to know his family. We reached out quarterly, proactively reached out, and at the end of each year, we brainstormed consistently new ideas and strategies for him and then helped him when his situation changed throughout the year and at the end of the year. And then if Andy ever needed to talk to us, he picked up the phone, he texted, he called, he emailed, and he received a response and never received a bill. And he did that because he was paying a simple, low, flat rate fee to us and we weren't billing on an hourly basis. That is the difference between a relationship and an engagement. And let me ask you this. Are you engaged in an engagement with your accountant, or are you in a relationship with your accountant? If you're in an engagement, how much is that costing you?